Hi, welcome to class 17 of our course, a complete course on Indian stock market. In this class, we will learn how to map economy needs with certain sector performance. What I mean to say that every economy is going through certain cycle, and in that cycle, certain sector has a major role to play, or some sectors have a very vital role to play for the growth of the whole economy, right? So that's why I named it the economy needs. So our economy, Indian economy, need very specific thing at certain point of time, and that's why certain sector performed really well. The companies within that sector didn't do something extraordinary. They did very normal things. They did BAU, business as usual, and then they become very great companies or big companies and given huge returns. And we will talk about those companies in any specific one sector or two sector, let's say, and then we'll try to understand. This is not a very formal class which I have created for you people, especially this module 2, class 16 and class 17, these two. Okay, so I'm not sure in very this certain manner any book explain you about sector analysis or industry analysis or how to map these two things with economy performance, but I have included them because I wanted to share my own experience with you people, that how I do things, how I forecast things about economy, about sectors, and then within those sectors whether certain companies aligned properly or not with the sector's nature of business. Well, so in last class you learned about how to see data, how to see trend, from where to see the official numbers from the government side about different sectors and industry, and for which I also explained you about this website IBEF. But in this class I'm not going to show you any website. What I'm going to tell you that all you need to do is look around you and understand what are the different businesses you see around yourself, how many businesses you are exposed to from morning till evening till you go to bed. Even when you are sleeping on your bed, you are exposed to so many businesses. The mattress which you are using will be made by one or the other company, right? And this is what we will try to learn few things with my own experience, that what I have understood about certain sectors historically, how they performed, how exactly they were mapped really well with the economy need that time. This is what I'm going to explain you here. Again, it's all my personal perspective, personal views. However, before making this class, I did a webinar with some other people who were working in specifically those sectors, and I told them whether I'm right or wrong, and those data I collected, and on the basis of that only I'm creating this class. I'm sure the sector which I'm going to discuss right now, many of the learners would be from those sectors and they can give their opinion also. In our course, we have this open forum as well now. So after every class, you can basically comment if you don't agree or you want to discuss something, or open a very positive discussion around these classes or any topic as such which will help people learn about these classes or this specific module, right? So moving forward, what we are going to see is some data first and then try to decode few things. So one sector which I'm going to show you people is IT sector. Let's see some data. Let's say in IT sector, if I take the very first name, it comes as TCS, Infy, then you have Tech Mahindra, HCL Technology. Well, 4 is enough. So I have also made one referential video about this screener website, that how you have to use it. I'm sure you would have seen that video already. And now we are on screener website. What you can see in a screener is this company TCS has given 18% compounded sales growth in last 10 years. Profit growth at the similar lines, stock price growth again at the similar lines. What you can see in the 10 years line, whatever is the growth in the sales has resulted in the similar kind of growth in the profit and a similar kind of growth into the stock price. Well, I don't think there could be any better example than this TCS, where you can very easily tell people that it is not about stock market is not about gambling, but it is about business and performance, and people can show these kind of numbers that how exactly in long run people have made money. You know, a lot of people talk about different asset classes like real estate and gold, and what has happened in last 10 years in real estate. I don't think in any city real estate would have given a consistent growth of 18% year by year. If you see the return on equity, it is 36% rather, because they have also incorporated dividend, right? So keep looking at these companies, you know. Now I'll show you the Infosys number. Okay, not as great as Infosys, TCS, but a good number, decent number I would say, not a good number, but decent number. Look at this company, Tech Mahindra, 22, 15, 13, and return on equity is 23. So return on equity in last 10 years is 36% for TCS year by year. Return on equity on Infosys is 24.97%. On Tech Mahindra 24%, and HCL Tech compounded annual growth is 21.34% in stock price CAGR, and this number they are not showing. Let's see the graph now. The graph shows you from last 10 years probably. This is from 2005. So you can see a 47 rupees stock has gone to 590. Similarly on Tech Mahindra, you would see great numbers only. 135 rupees stock, 800 rupees. 130 rupees stock going to 770, and TCS would be much better than all these companies' numbers. But mind it, all these companies have given great returns. And when I see it from 2003, 2005, it shows a decent return. But think about when they started way back in 90s. You know, Infosys got listed in 1993, yes. And there is a very famous story that even if you have bought 100 shares of Infosys, you would be a crorepati by now. I mean, this is a very, again, old story, not a today's story, probably 10 years back story. I mean, people would have achieved that number even 10 years back. So what I'm trying to tell you here is, one complete sector has performed really well during this period. And when this full sector has, you know, any company, if you would have picked up from this sector, it would have given you a very good return. Now, my point is how just one sector has given such a good return. It is only possible because this sector was completely aligned with Indian economy performance. It was completely aligned with how exactly New India was shaping. New India was shaping by people who were good at mathematics, who were good at giving services, who were very good at I mean, they were good at certain things, but apart from that, what they were really good at for US, Europe companies was that they were available at a very lower cost. You know, there was a very good cost advantage on people India had from a very early stage of when globalization happened, 1991 onwards. We hardly had jobs in India, you know, and at that point of time, people who were getting job, they were finding it I mean, forget about what kind of job it is, forget about how well paid job it is. Most of the Indians in early 90s, in early 2000 were all interested into job. Everybody wanted to get paid well or better, but then majority of the population was available at a very good cost advantage. You know, so some work which can be done in US at $100 per hour will be done in India in $2 per hour also. I'm talking about early 90s and early 2000. This is not the case anymore, but it was that time when people were available at these kind of cost. And that was the reason these companies grew. They had this advantage that they can build the foreign companies at a very good rate and hire employees at a very low rate and can create a very huge margin for them. And that's why it was the time when they made maximum profit. They grew year by year, and not one company but every company grew year by year. It was very much aligned with the economy. It was very much aligned with how India was shaping. It was very much aligned with Indians and the young generation who were looking for job, and they were talented, they were hardworking, but then yes, the cost advantage also worked for them. What I'm trying to tell you that something which I am decoding from the previous numbers are that yes, if blindly also I would have followed this theory that IT has a good future, this advantage is going to stay for another 15-20 years, and if someone would have bought just even with this basic information which we had, he would have made a very good consistent return year by year in last 25 years. No in-depth equity research required. All he was required is this smartness to understand. I know it's very easy now to comment, but I'm sure there were many people who would have simply believed in this idea, and they are the early investors of TCS, Infosys, HCL Technology and other IT companies, and Wipro. Wipro is a big name which I forgot. So Wipro would have a similar numbers. Let's revise Wipro also, and then we'll move to a different sector. So even in Wipro, you see that people have made money. So only thing which I'm trying to highlight here by giving these examples of my companies is that these companies have given consistent return. All these companies, not just one company. There might be other companies, smaller companies like Mindtree and some other company which has also given good return. But if you see any IT company, even in companies which are not listed, they would have also made a really huge profit or good profit. Now the point here is, I'm talking about IT industry. Is it going to stay the same way? For that, you have to go and learn about this industry, this sector in little detail. So what we saw till now is the number. What we saw that it was aligned with economy, it was aligned with people, it was aligned with all the advantages India had, and this industry had to flourish. But what about the future of this sector? Can we do the analysis for that also? For that, we need to go in little detail about this sector, and for that maybe I'll open an Excel sheet and show you people. So I spoke to a lot of IT people who worked in IT industry, and I asked them, especially people in these companies, because I'm talking about IT sector. I had plan of including IT sector into the class and explaining you people. So I had to speak with more IT people. But before that, I tell you that what I understood about current shape of IT sector. Let me show you something. I have typed here Amelia IPsoft. So there will be a small video which I want you people to see. Sorry, so
And in a growing AI landscape, how do you choose the right virtual agent? While most solutions claim artificial intelligence, they are just that, artificial. Typical virtual agents and chatbots are pre-programmed and can only follow scripts. But newsflash, people don't follow scripts. It's time to put the intelligence back in artificial intelligence. Unlike chatbots, Amelia does more than recognize keywords and answer user questions. She observes, learns, and understands her human coworkers and customers, allowing her to comprehend intent. And when the user switches requests or topics, Amelia has the ability to follow the conversation, delivering quicker, more effective answers. When you hire Amelia, she can be trained to address a variety of your company's needs. Does your company have other enterprise systems? Amelia can integrate those, allowing her to orchestrate all the actions necessary, giving her human coworkers and your customers better results and a painless experience. How effective is Amelia? Our client feedback speaks for itself. Amelia achieved a 93% reduction in average IT resolution time at a global investment bank. At a leading
Okay, so I would like to ask you people to hear this again. This is statement.
time at a global investment bank.
93% of reduction in resolution time at global investment bank. Well, let's freeze it for some time and try to understand about the IT sector, who are the client of the IT sector. So when I talk about these IT companies, their clients are mostly from BFSI segment. In the early days, it was 95% plus revenue was coming from the BFSI segment, banking segment sector. These days, it is coming from different sector as well, but still BFSI gives the maximum revenue for the IT sector. Now, something like Amelia, something like IPsoft of a company is giving services to the global investment banks, and they are reducing the 93% resolution time of the IT resolution time. Means there are issues in the product the investment banks are using, customers complain about them, and then there is Amelia, which is a humanoid, which is a robot, which has artificial intelligence built in them, are resolving those issues. Well, the IT industry here in India, these companies, the traditional companies, they also operate in the same segment. And when I interviewed people, what I got to know here is any IT company have 4 department. One they call as development team. So this team develops softwares which client use, or they customize software also. Then they have a testing team, and then they have production support team, and then they have bench staff. In these 5 giants, IT giants which I talked about, their bench staff ranges from 23 to 26%. What I'm telling you here is 23 to 26% of the staff in these 5 giant companies, IT giants, sit on bench waiting for the projects, I mean idle resources, not doing anything for the company during that period. Around 30 to 40% ranges in different companies do production support. This production support is something which I was trying to tell you, the resolution time. At production support team does the same thing what this Amelia is doing right now from IPsoft. Then when people develop software that needs to be tested, 20 to 25% of the staff are doing software testing. So 10 to 15% of the staff, I mean you can sum it up in a different way, are there into the development team. In different permutation and combination, you can rearrange these 3 teams that what kind of education they have done, but more or less this is what the structure of all these 5 IT giant companies are there. Now my point is, when this world is moving forward in something like Amelia, you have better companies to invest within the, I mean even this IPsoft. The beauty of IPsoft, I'll tell you again, is a company formed by one Indian only. His name is Chetan Dubey. He was one of a mathematician in one of American university, and then he ended up founding this company based on AI, which is doing wonders right now in the field of artificial intelligence, where most of the top investment banks, global investment bank, one by one have started becoming their clients. When I was working with Morgan Stanley way back in 2010, that time this company also came and give their proposal, but we ended up making TCS our vendor in Morgan Stanley, because they were looking for initial heavy investment, because they had to do a lot of research around how to implement AI within the bank. However, TCS was very much ready to offer at a very low cost initial setup, and also at very low cost than other competitors, regular production support people for Morgan Stanley for their different departments. What I'm trying to tell you that what where the strength of these companies may not be now the strength anymore, and the kind of growth they have shown in last 25 years, the similar kind of growth may not be there in future. Well, this is again my perspective. The way I decoded from the past was my perspective. The way I'm looking at these sectors for their future again is my perspective. Your perspective could be completely different. My perspective here is now you have better softwares, better modules, better plug and play kind of system, and robust system. Your testing may not be required that much, and even testing can be automated. A lot of companies are now going for the automated testing. They are not keeping manual testers on payroll. I mean, the future is the automated testing, and these companies, majority of their strength is around testing, production support, and bench staff. Well, the development of the software will be better, and that's how you probably don't need testing team or such a large testing team, because 4 automated testers or 4 coders can write programs which can replace 400 testers. Similarly, for production support, now that you have better softwares, robust software, their failing rate will also go down, and even if it is failing, IPsoft kind of companies, according to me, is more capable of handling those issues than here these giants keeping manual production support people to support the systems which they have given to different banks or BFSI segment, or let's say in any sector. So idea what I'm trying to tell you here is, okay, 25-year, 30-year run was a very good run, but this doesn't mean that next 10-year will be also very, very lucrative. The idea is you have to go and collect information about different sectors. Sometime you are working in one sector and you should know the intricacies of. Most of the time when you work in a large company, you are dedicated to your job, you look at only your piece of work and you don't look at the business from very top perspective. But then if you start reading, when you start introspecting those companies and that sector from an investor perspective, you will start asking intelligent questions from people around you. You will start reading right news about those sectors, and this is what you have to do to understand whether one specific sector will be a good choice of investment or not for you. All I'm trying to tell you here is there are a lot of examples which you can take in different sectors and try to decode yourself that okay, this sector didn't do really well in last 10 years because of this, but maybe right now it is the time that these sectors will start doing well. Or you can also decode that okay, there is one sector called banking which has done fairly well in last 20 years, and since there will be no change in the banking sector for another 20 years, I mean the way banking has been done, there is a very high chance banking will be done in a similar fashion even after 20 years. So you may remain invested into good banks, right? So all you need to do is ask a lot of questions around these sectors and try to find different information, try to go a little deep into it. You know, you have to do this exercise yourself. Obviously there are official numbers for which I have shown you one website in the last class, but in this class what I'm trying to tell you that you have to do a little bit of exercise. You have to put your thinking hat and start thinking why something has happened in a very positive manner for a complete sector. And you also have to see that where exactly the country is moving and what will be required for this country, where the change or where the shift will come altogether in consumer behavior So these kind of questions you have to ask, and you have to look around to understand whether one sector is going to perform well or not perform well in next decade or in next 5 years. Well, this was all in the sector analysis class. In first class you learned about that website. In second class I shown you about one sector, that how I understand about this sector, that why it did well and why it will not do really well in coming decade. Well, this is a pure perspective of mine. When I'm saying they will not do well, this doesn't mean that they will not give even a basic return or simple return like 15-16% or 12-13%, but then those companies needs to be selected with a caution. I mean, out of these 5 companies, which company will transform and become one of a very high-tech company, I don't know. All you have to do is you have to keep a watch on them. But something what all companies within that sector has done really well, kind of situation is not going to repeat. Selectively 1 or 2 company will do well in another decade, even if IT has to there, even if all these 5 giants has to be there, or a decent business around this sector has to be there, but they will be very selective company, not like the whole sector will grow. And obviously staying into market or investing into market is being very selective. You have 5,000 listed company, all you need to do is identify a good 10-12 companies to invest, and that's how you will make money, that's how you will beat inflation, that's how you will target a decent return of 15-20% in a year. And this is what you should target as a passive investor. Thank you.